Should I expect that if the Fed's going to keep hiking the next coming years or two, that Hong Kong's going to follow?
Well, I think overall speaking, to be honest, I think the impact for the overall Hong Kong investment market would be relatively limited. You can basically back to two reasons. First of all, even with the interest rate rise in the US side, it is very likely to be gradual and step by step. And to be honest, even with the meeting that I had last night with the renewed forecast, it is very likely to expect the rate is still staying on a sub 2% level by 2023. And the second thing is really if you look back to the historical cycle where Hong Kong, when the US market is having their rate hike, Hong Kong market may not necessarily follow. And even if it does, usually we are of less of an extent and with a very substantial time lag. So I think overall the market will have time to digest on that. And at the same time, investing nowadays in Hong Kong is very sophisticated. I mean, they will definitely price in before they actually purchase into an asset with a more attractive yield level so as to not to risk themselves to get into a negative carry going forward for the next couple of years' time.
So your expectations on prices, home prices, very, very basic for next year then?
Well, but for residential properties, I think it is definitely something really solid and with a different dynamics in Hong Kong. Especially we have been seeing a very substantial supply shortage in terms of the housing over the last 2 decades. And this kind of supply-demand imbalance is not likely to be improved in either side of the equation in the short term, even though the government is putting so much effort in boosting up the long-term supply in the market. So that said, if we look into the price level over the last 2 years, even with the pandemic that is going up on the ground, but we are still seeing the residential price staying very solid level with 2020 staying flat and 2021 this year we're already seeing a rebound of 4% year to date. So next year, unless we are seeing another black swan event, otherwise I would think that residential price is still going to hold up very tight with an upside potential of 3 to 5%.
But why is, so that's the other question I had is why are property prices here remaining flat and resilient, and not to question why they're doing so, because people are leaving, the border's closed, and is it simply what are volumes too as far as transactions, because maybe people are just not buying and selling?
Well, if you look into the transaction volume level, actually in 2021 we are actually hitting another record high year.
Okay. There we go.
So that's basically you can see no matter in a first-hand transaction or second-hand transaction, yes, there are cases people leaving Hong Kong, but as we mentioned before, because of the prolonged supply shortage, some of the newly married couple or younger generation, they need to step into the housing market, and that's why it keeps up the momentum ongoing.
With these prospects of the Hong Kong and China borders reopening now, what sort of appetite do you think we're going to see from mainland buyers now?
Well, I think, if you're talking about the residential side, what we hear from the front line is that, yes, borders still, we are in a lockdown stage, but there are many pent-up demand, no matter from the office leasing side, investment side, or residential buying. There are sentiment out there, but the decision maker, because they can't really step across the boundary to go into Hong Kong to actually see the end product, some of these deals are pending up. So we do expect the transaction volume will be further boosted up once the border is going to be gradually relaxed.
And before I guess we move to the Greater Bay Area, just your outlook on commercial property.
I think it's different dynamics between different sectors. Because of the pandemic, definitely some of the most hit sector would be retail sector and the hospitality sector. And I think these two sectors already seen some improvement in terms of the sentiment and the occupancy rate over the last couple of months. And actually in the recent month, we do see the investment volume started to pick up for the retail investment front as well. As for the office side, I think overall, because of the border restriction again, I think nowadays the office movement or new letting demand is still remain relatively slow, but we do expect when the border is going to be relaxed, there will be more new demand coming through to the office market. And with the recent data, we already seen some pick up in terms of net absorption. It finally rebounded back to the positive zone in Q3 after staying negative for the previous 8 consecutive quarters. And at the same time, we also see some submarkets they are doing improving, in particular submarkets like CBD area and TST.
What about when it comes to the Greater Bay Area? What's your outlook?
Well, for Greater Bay Area, I think for the overall China market is pretty much policy driven, and you really have to look into the sector. But if you're talking about residential side, definitely we are seeing no matter the transaction volume or the pricing level, it's been slowing down quite significantly over the last couple of weeks. This is always back to the slogan that they're talking about: housing is something for living in, but not for speculation, right? But I think for the commercial side, there definitely the investment interest, no matter from outside of China or invested in Hong Kong or elsewhere globally. I think the investment interest is very keen in the Greater Bay Area. We have been receiving quite a lot of inquiries about the products in terms of the commercial properties and en-bloc buildings over there.
Are you, just very quickly as a final question, I guess, are you seeing any signs of these concerns that we talk about here of unfinished properties on the Greater Bay Area? Because a lot of these indebted developers are in the GBA area.
Well, I think back to the residential side, developing progress or developing cycle would definitely be slowed down because of the free red line policy, because of the loans that or the financing issues that some of the developers are facing nowadays.